Today, we're diving into a really incredible story of transformation. We're going to look at how one of India's largest banks took on the absolutely monumental task of rebuilding itself for the digital age. And look, this was not just some quick software update. This was a 20-year strategic overhaul. It's a fascinating blueprint for how these legacy giants can completely reinvent themselves from the ground up. And this really gets right to the heart of the challenge. I mean, think about it for a second. When you're a financial institution with decades of history, millions of customers, how on earth do you upgrade the entire engine while the plane is still flying? That's the core problem we're going to unpack today. So to really grasp the scale we're dealing with, let's start with this number. We are talking about a bank with over 6,500 branches all across India. That is just a staggering network of physical locations, and every single one of them needs to be perfectly in sync in this new digital world. And it doesn't stop there. This is not just an Indian operation. The bank operates in 17 different countries. You know, that means navigating 17 different sets of financial regulations, meeting totally different customer expectations, and building one cohesive system that can handle it all. The stakes for getting this right were just enormous.
All right, so here's our roadmap for this explainer. First, we'll look at the foundation, that 2-decade partnership that made it all possible. Then, we'll dive into the 3 core pillars they rebuilt: customer experience, security, and the very engine of the bank, its core operations. And finally, we'll see the incredible, tangible impact all this work had.
So let's start with section 1. To really get this, you have to understand the foundation of all this change. This wasn't some project with a start and end date. Nope. This was a long-term collaboration with their tech partner Newgen that started all the way back in 2002. You know, this timeline really shows the genius of their approach. They didn't try to boil the ocean. They started small, back in 2002, with a basic document management system. Once that proved itself, they took on bigger challenges, like implementing their first business process management system, or BPM, to automate account openings. From there, they just kept layering on more and more sophisticated solutions for financial crime, loan origination, you name it. It was this methodical, trust-based build-out over nearly 20 years. All right, section 2. So where did they decide to apply all this newfound digital muscle first? Well, they started right at the front door, completely reimagining the customer experience. Their biggest initial pain point was something that sounds simple, but was a huge headache: opening a new bank account. Before this whole transformation, the entire process of onboarding a new customer was a massive bottleneck. It was buried in manual paperwork, which led to these long, frustrating waits for new customers, and of course, expensive errors for the bank. This was their first impression, and frankly, it wasn't a very good one. And this slide really breaks down why it was such a mess. It wasn't just one thing. You had the crazy amount of manual work. Customer data was trapped in all these different silos, making it impossible to get a full picture of anyone. And finding the right document? A total nightmare. All of this added up to a really frustrating and inconsistent experience for anyone just trying to join the bank. So the solution tackled all these problems head on. Suddenly, customers could start the process from anywhere, on any device they wanted. They could upload documents and e-sign forms digitally, no more printing. Identity verification, the whole KYC process, was automated. And once approved, you could fund the account instantly. Everything that happened next, like setting up your internet banking, was all processed in parallel, not one after the other. It was a total game changer. Okay, moving on to section 3. With a much smoother customer experience in place, the next big priority was protecting both the customer and the bank itself. With thousands of branches, the old manual ways of trying to detect fraud were like trying to find a needle in a global haystack. They needed a powerful, automated defense system. This before and after comparison just says it all, doesn't it? Before, they were tracking potential fraud cases over email and could only run these minimal checks on a tiny fraction of applications. The whole process took weeks. After, cases were created automatically, multiple online checks ran in parallel, and that turnaround time was cut from weeks down to just days. What's so key here is that shift from manual to automated. Instead of an employee having to manually start an investigation, the system now automatically flags suspicious activity and kicks off the whole process. And by running those checks in parallel instead of one by one, they just slashed the response time. It's all about letting technology do the heavy lifting so that the humans can focus on the really critical decisions. And the problem was even worse for what's called enhanced due diligence, or EDD. This is something that's required for high-risk customers. In this area, the bank was really struggling with regulatory compliance gaps, trying to monitor transactions by hand and often miscategorizing cases just because the process was so inefficient. So, their solution was to bring everything into one place. They built a unified platform that automatically created investigation cases. Imagine you're an analyst, right? Instead of digging through 5 different systems, you now have a single screen with every piece of data, every relevant document, and all the verification tools you need, right there. This dramatically improved their ability to track and report financial crime effectively. Next up, Section 4. Now they turn their attention to the very heart of the bank's operations, automating its core functions. We're talking about the heavy machinery now, processing loans and handling the massive volume of daily transactions that keep the bank running. Let's just take retail loans as an example. The core problem here was a familiar one, a tangled web of manual processes and siloed departments that just didn't talk to each other. For a customer, this meant a slow, confusing, and deeply frustrating journey to get a loan approved. So how'd they fix it? Well, they built a completely modern lending platform. Customers could now apply from any device. The system instantly ran automated checks with credit bureaus. They even integrated AI models to help with the complex underwriting decisions, making them way faster and more accurate. The result was this seamless pipeline, from application straight to getting cash in hand. This brings us to a really cool concept they implemented in their trade finance operations, the no-click process. Just imagine a business request credit for an export. The system automatically validates all the mandatory checks and then triggers the loan disbursement without a single person having to click a button. I mean, that is the absolute pinnacle of automation efficiency. And that brings us to our final section. So, after 2 decades of relentless work, what was the bottom line? Let's look at the real, tangible impact. What were the actual, measurable results of this massive digital transformation? This quote from the study really gets to the core of their success. See, it wasn't about improving one single thing. It was a holistic win across the entire organization, from workflow automation and tighter compliance to happier customers and a much more empowered workforce. And the hard numbers, they're just staggering. Team productivity jumped by as much as 70%. Those processes that used to take weeks, now they take days. And the new system is an absolute workhorse, processing over 12,000 transactions every single day. Let's look at one final area, cash management, because this table just lays out the benefits beautifully. This system now actually uses predictive analytics to automate cash requests, which prevents ATMs from running out of money. It totally eliminated manual data entry for the accounting team, and because balances are reconciled daily instead of weekly, big discrepancies are basically a thing of the past. So this was a monumental 20-year journey of digital transformation, executed piece by painful piece. It really leaves us with a fascinating question. As AI and other technologies accelerate at an exponential rate, what will the next great banking transformation look like? And will it take another 2 decades? Or is it going to happen in just 2 years?